Canada's real estate market is on the brink of a major shift, and most homeowners have no idea of what's coming. Rising vacancy rates, slower population growth, and mortgage affordability challenges are setting the stage for one of the most unpredictable years in Canadian housing. But what does this mean for you as a homeowner or buyer? It's not just about fluctuating prices. These trends could impact everything from your property's value to whether now is the right time to sell or buy. In this video, I'm going to break down the data to uncover the key trends that ultimately will shape the market in 2025, so you can make the best decisions for your future. Real quick, for those who don't know me, my name is Richard. I'm a real estate agent that's passionate about keeping Canadians informed about what's actually happening in the housing market. So naturally, this channel is all about Canadian real estate. And so if you like that and you want to stay up to date, give this video a like and subscribe to the channel. Let's start with a critical driver of Canada's real estate market: population growth. For years, Canada's booming population has been a cornerstone of housing demand. But the story is changing now. In the third quarter of 2024, Canada's population grew by just 0.4%. That's the slowest rate of growth since 2022, and among the lowest for Q3 in nearly a decade, as you can see in this second graph here. And so why does this matter? Because population growth isn't just a number. It's a key factor shaping everything from housing prices to rental demand. And over the past 2 years, Canada's population was growing at an annual rate of nearly 3%. But now with federal policies aimed at reducing this to nearly zero by 2027, as you can see in this graph here from the government projections, and the implications of this for the housing market could be enormous. Temporary residents have been a big part of the story as well, as in Q4 of 2024, growth in temporary residence numbers slowed dramatically, with steady permit holders and temporary workers adding just 33,000 people, down from 191,000 in Q4 of the previous year. Meanwhile, outflows from the non-permanent residents cohort surged to 660,000 over the past year. And this has been accelerated by expiring permits and fewer pathways to permanent residency. And here's another thing to consider too. The total number of non-permanent residents in Canada remains at 7.4% of the population, or just over 3 million people. But Ottawa plans to reduce this to 5% by 2027. And these reductions will undoubtedly affect the housing markets, especially rentals, which have relied heavily on demand from this group. And now that we've had a quick look at population growth and immigration, we need to understand where is everyone going. And that's what's shown in this next graph. As you can see, Alberta continues to be a leader in this, with population growth nearing 4%, being the fastest in Canada. And just for context, that's nearly 200,000 people. Though that's not all new people who moved to Canada and then moved to Alberta, strong interprovincial migration has played a big role here, as people move to Alberta from other provinces. But it's interesting, as this trend is quite a bit different when we look at this graph here, showing Ontario as having the most interprovincial migration, where many of the people are moving elsewhere within Canada. And so if you're living in Ontario, I'm curious, like, what is going on here? In summary though, population trends are entering a new phase with slower growth, shifting regional dynamics, and major implications for housing demand. But just as population changes are reshaping the market, mortgage trends are making waves as well that could redefine affordability and financial planning. But before I get into all of that, I want to dive quickly into the rental market, where we're seeing some interesting things happening as well. And so for years, Canada's rental market has been red hot. We've all experienced it, with demand outpacing supply. But in 2024, it seems to be shifting the other way around now. And according to CMHC's annual October survey, the national rental vacancy rose from 1.5% to 2.3%. That's a pretty significant jump. This increase in vacancy comes despite record population growth over the last few years, highlighting a critical point. Some may say that it's not about falling demand, it's about rising supply. And when we look at this graph here, nationally, we are seeing a flood of new purpose-built rentals entering the market, with a record 140,000 units under construction. And if we were to include half of the condo units currently being built, because as we all know, a lot of those condo units are going to be going towards rentals, the effective rental supply could rise to nearly 250,000 units in the next few years. In Atlantic Canada, the story becomes even more pronounced. Rental stock in the region has experienced a growth of 14%, which is far far off from BC leading the way in the new rentals being built, but with a stagnant or declining population and interprovincial outflows in the Atlantic provinces, vacancy rates could rise substantially if nothing changes. To me, this is a key area to watch out for, as oversupply in rental housing could create ripple effects across this market. On a national scale, rental growth is already slowing. In 2023, rents were growing at 8.2%, but that figure has dropped to 6% last year. This cooling is expected to continue as supply swells and demand stabilizes. So if you are a landlord, this will signal a tougher operating environment, one where adaptability will be key to maintaining profitability. Looking forward though, the implications are pretty clear, with record-breaking construction in the pipeline and population growth slowing. Canada's rental market, in my opinion, will be shifting more in favor towards the tenants. We could see vacancy rates double or even triple, creating more options and better negotiating power for renters. For landlords and investors though, the next few years will be about managing these challenges strategically, whether it's focusing on high demand regions like Alberta or adjusting rental strategies to align with the new market realities. I'm going to be touching on some of the regional highlights as well that, in my opinion, are shaping Canada's real estate landscape right now, though I want to talk about what's happening in the mortgage sector first, to give us a full picture on how it's impacting affordability and demand across the country. In the mortgage market, we are seeing a surge of activity after two of the toughest years in recent history. When we look at this graph, we can see that the mortgage originations rose by a staggering 51% year over year, marking the largest annual increase since 2019. Then when we look at what types of mortgages seem to be the trend right now, we have variable mortgage rates are on the rise, with less people opting for 3 or 4 year fixed mortgages, which is to be expected as the Bank of Canada will continue to cut rates in 2025. I think the question we need to be asking ourselves is what exactly is driving this surge? And it's no surprise that renewals are playing a big role here. Many homeowners who secured low fixed rates in 2020 and 2021 are now coming up for renewal in 2025 and 26. And by looking at this graph, we can confirm this by looking at the total dollar amount of mortgages currently held in Canada. It seems to be holding steady, though with the rates still significantly higher than a few years ago, we're beginning to see the leading edge of this wave in the data. At the same time, affordability remains a pressing challenge. Monthly payments on a typical home purchase remain 75% higher than they were in 2021, even after recent interest rate cuts by the Bank of Canada. And this is putting immense pressure on new buyers or existing homeowners alike. To add to the complexity, the Bank of Canada's Housing Affordability Index shows that we're still at unaffordability levels last seen in 1991. And while things are improving slightly, affordability remains a key barrier for many prospective buyers. This is a reminder that even with price corrections and rate reductions, the market is still challenging for many Canadians. Another factor to consider is the increase in HELOC balances, which has seen the largest monthly jump since 2012. This is noteworthy because rising HELOC often signals two very different scenarios. Either households are borrowing to fund big ticket purchases like renovations or vehicles, or they're using credit to make ends meet. It's still too early to tell which story will dominate, but in my opinion, it's the latter. Looking ahead though at the expected Bank of Canada's policy rate path of 1/4 to 1/2 point reduction for 2025, the payment shock many households are set to face in 2025 and 26 could reshape the market. Homeowners coming off fixed rate terms could see payment increases of 35% or more. In summary, the mortgage market is undergoing a significant transformation. While renewed activity and increased originations signal resilience, affordability remains a major hurdle. So if you're a homeowner or a buyer, navigating this environment will require careful planning and an eye on future rate movements. Now, if you're still with me and you're wondering, what does this all mean and what should I be doing going into 2025? I have some suggestions that I'll cover shortly, but first I want to cover some Canadian regional highlights, facts that are worth mentioning. And so let's take a closer look at how different regions across Canada are performing in today's real estate market. While national trends tend to give us a big picture, the regional stories reveal how buyers, sellers, and investors need to adjust their strategies. National home sales rebounded strongly in November of 2024, which is up 28.9% year over year. Quebec led with a 45.5%, followed by Ontario with a 33% increase, and Alberta at 14.9%. What this signals to me is that there is some buyer confidence across Canada despite ongoing affordability challenges. Meanwhile, inventory levels are beginning to stabilize nationally, but it is varied by region. Alberta did see decreases, while BC and Ontario recorded significant increases. There was some price recovery in major markets. The MLS House Price Index rose by 0.6% in November, its strongest monthly gain in over a year. And another interesting stat is that all the major metro areas saw price increases over the last 6 months, a sign of growing stability in the market. Ontario and BC continue to lead in pricing, while Alberta remains a more affordable option bolstered by strong interprovincial migration and population growth. Though there seems to be a different story out east past Quebec over the Atlantic provinces, where their market is facing different challenges. Interprovincial outflows, particularly in Newfoundland and Labrador, are at the highest in a decade. At the same time, the region is seeing a rental construction boom, with the stock projected to grow close to 14%. When I see this happening, this creates a risk of oversupply, which could drive up vacancy rates significantly. We've covered a lot of information here, so feel free to go back and rewatch some sections. But as promised, what does this mean for you? Well, it kind of depends on if you're a homeowner or you are looking to buy a home. So if you're a homeowner, I'll start with you. Be prepared for market adjustments. Slowing population growth and a flood of new rental units could impact property values in certain regions. If you're in a high growth area like Alberta, your property may hold its value or even appreciate. But in softer markets such as Atlantic Canada, oversupply could affect prices and demand. Then what you need to do is monitor mortgage renewals. If you're among the many homeowners with fixed rate mortgages expiring in 2025 or 26, plan ahead for potential payment increases of 30% or more. So I would encourage you to speak with the lender, explore some refinancing options, maybe some restructuring options, talk to a professional. Last thing is adapt to regional trends. The market conditions in your region are going to play a big role in your next steps. So I want you to pay attention to inventory levels, sales trend in your area to decide whether it's a good time to sell or hold. So now if you're a home buyer, this is what I would do. While interest rates have eased slightly, affordability remains a challenge. And so focus on entry-level or mid-range properties. And if you are in a more competitive region, be prepared to act quickly. So this means doing all your homework, all the legwork beforehand. Another thing is leverage opportunities in oversupplied markets. And so an example of this would be in the Atlantic area, where rental and housing stock are growing faster than demand. And this most likely will be happening in many other provinces and certain regions within those provinces. It's just you need to talk to a local expert there and understand what is going on so that you can take advantage of that oversupply. And then I would assess regional prospects. And what do I mean by this is, well, go check out other provinces that have better opportunities than the one that you're currently in. Alberta or other high growth regions remain strong options for long-term investments, with population growth and interprovincial migration driving demand. Staying informed will be essential if you are a homeowner or looking to buy a home in the near future. Keeping an eye on the macroeconomic factors like interest rate cuts, consumer confidence, market trends, just to name a few, as these will all continue to influence the housing affordability and market conditions. There's no question the Canadian housing market is at a crossroads, with major regional and economic shifts shaping its trajectory. For you homeowners, this is a time to plan strategically, whether you are renewing a mortgage or considering a sale. For you buyers out there, this is an opportunity to evaluate the market conditions and make informed decisions. While staying proactive and informed will be the key to navigating this evolving market successfully. And as always, subscribe to the channel, that way you never miss a video and you stay informed of what's happening in the Canadian real estate market. And I'll see you in the next one.